All right. Good afternoon, everyone. Today is Thursday, February 28th, 2013, the last day of February. We were gypped a couple of days this month. That's unfortunate because I really think if we had those couple of days, we'd have gotten our monthly goal of $4,000 a month per contract. What we ended up with on the month today, I actually have it in red. I don't know why I put it in red, but today we made 15 ticks in crude oil, 21 ticks in gold, and 7 ticks in soybeans. All right, and that gives us a total on the month of $3,905 a contract, down from the 4,000 we were trying to get by just one trade, really. And I blame it on this day right here. This is this down day. Yesterday we didn't have any. We were break even yesterday. So if I'd have made 2 points yesterday, we would have been there. Or if I would have made 2 points on this day, we would have been there. Now, mind you, on yesterday and on this day, in the break between the end of the morning session and the start of this session, that half-an-hour break, I did get to plus 2 points on both of those days. But I don't count that. I only count what's actually done in the live trading room. And so we're plus $3,905 per contract, and it was on, actually, 11 trades for today. It was on 112 trades for the month. Okay, 112 trades it took to get to $3,905 a contract in the live trading room. Okay.
And based on that, a person could compute whatever their cost would be.
Yep, you can compute your own costs because everybody's got different fees that they pay. Not everybody, but most people have different fees that they pay. All right, so you can. It was 112 trades. It took us 72 trades this month to get to 2 points a day. That includes the days where we didn't get to 2 points a day. On those 2 days where we didn't get to 2 points a day, we actually had 16 trades between those 2 days alone. But the rest of the days, if we average it all out, how many days did we have? 28 to 46. We had 18 trading days. Let's just do that, okay? We had 18 trading days. We had 72 trades divided by 18 trading days. So it took us an average of 4 trades to get to the 2 points a day. 39.05 divided by 18. It's an average of better than 4 points a day is what we averaged on the month. That's pretty good considering that this month, I had some family issues early in the month. And
not only did you attend to your family and take care of those needs, but you managed to continue to attend to this family as well. So I don't want you to think that went unnoticed by me or by an awful lot of folks, and we applaud you for that.
Why, thank you.
It's an important thing, and you have a high level of commitment to your work and to your family. So I have a lot of respect for that.
Why, thank you.
So to put it in perspective, what Michael just said about the dollar amount, the number of trades, because I know a lot of people, they look at this thing, they go, hey, wow, that's a lot of trades. Oh, man, you're going to give everything you make to the broker man. You're just blowing all that up in commissions. Well, no, because based on the average commission, and different people have different costs, okay? But let's say, your costs are a little high. It shouldn't be more than, what, $900, Michael?
Yeah, it should be nowhere more than $900. Even if your costs are high, it should be less than that.
It should be less than that. So if you subtract that from the total, you have a net amount. You can now take that net amount and multiply that times however many contracts it is that you trade or have worked up to, or if you're writing your business plan, your trading plan. Remember, our recommendation is that you stay in the simulator until you're consistently profitable. You then go live with one contract. After you make $1,000 in the market, you go to 2, make another $1,000, go to 3. So you're always increasing with money you made in the market. That's a sensible way to build it. But unfortunately, a lot of folks don't want to do it that way because it's kind of slow. In the grand scheme of things, it's not slow, but it seems slow. So people want to jumpstart it. You know what? Trading 1 and 10 is the same. I'll just start with 10. That never ends well. I ever hear once of that ending well. It just doesn't. So, all right, I'm sorry.
That's all good. I mean, no, and you and I are perfect examples of that. It took us years to overcome the ending of starting out with too many contracts.
Psychological damage, guys, is worse than the financial damage. It really is. Just don't do it.
Just don't do it. All right. Let's see. I wanted to... Oh, the results. The results for the day. I think I went plus 21 on gold, plus 15 on crude, plus 7 on beans. That's plus $447.50. We needed to be plus $540, or $537.50 is what we needed. So I missed it by 95 bucks. Oh well. If the live trading room would have lasted just 5 more minutes, I think we could have done it, but no big deal. Let's just go over the trades. All right. Dwayne went over everything. Jerry, that's a good question. There's a question here. What's the tax rate on the futures trading? Is it 40% less commission? As a matter of fact, no, it's not. It works out to about 23%. Go see your tax advisor. But there's a 60-40 split. At some point I want to do a big thing on that, and we'll pass all that information out. Yep, there's a 60-40 split, right, Frank? So it works out to be about 23%. Anyway, don't want to get off topic there. The results. Oh, if you have not taken a free trial with us, go to www.cfrn.net/apply. Sign up for the free trial. In the free trial, you get 5 luxurious days in our live trading room. In the live trading room, for 2 hours per day, you get to sit in our live trading room. In the live trading room, you get to watch us put the trades on, take the trades off. You get to watch us manage the trades. You get to ask us any questions you want. I do try to answer all the questions in the live trading room. I know today I ended up running over 15 minutes because there were a bunch of questions that I didn't get to. But I think I answered all the questions at the end, and I sent all the emails that I was supposed to send, and I took care of everything that everybody wanted. I think, so far. And we have the partners meeting tonight. So if I didn't, then you guys can just come into the partners meeting with your questions loaded, and if you want, send them to us ahead of time so we can be ready, and we can be a little more orderly in the partners meeting. For those of you guys who did not make it into the live trading room today, but you're listening now, who are partners, I have a lot of stuff that I'm going to go over in the partners meeting tonight. Nothing is going to be brand new. There's going to be some things that the way I discuss them are going to be new to you, but it's not, we're not revealing any new indicators or anything like that. Nothing like that tonight. Any new setups or anything like that. It's just, I'm going to go over a lot of stuff that I think we need to go over. And if you are not a partner, or if you're sitting on the fence, Dwayne already gave you just an additional incentive. If being consistently profitable wasn't enough of an incentive for you, we're going to give you. We'll put you in a drawing. We'll throw your name in the hat for a drawing for the mini iPad. And I think we may do more of these drawings in the future. Yeah. All right. Let's get into the actual trades. Okay. www.cfrn.net/apply if you haven't taken the free trial. If you're on the fence with the free trial, or if you don't know what it takes to become a partner, send us an email at support@cfrn.net, and just put partner info in the subject, and we'll send you all the information that you need. Okay. Let's start out with crude oil here, guys. Okay. There were a bunch of trades in crude. Any one of these trades right here would have put me over $1,000. I mean, not $1,000, the $4,000, but I missed them all. There was an up close right here. I'll show you the pictures. I'm going to bring the pictures up. Now, this is recorded, so you guys can always go back to look at the pictures, or you can make a screenshot of the pictures and print it, or do whatever you want with it. But I'm going to bring these pictures up and show them to you. The one that comes into play right here is this one. I think memory kind of messed it up when I dragged it from monitor to monitor. There we go. All right. And then I made it go away. Right here, when you have this bullish cross right here, the MA1, the blue and red line is the MA1, blue and red line is the MA1. Step 1, you get your bullish cross. Step 2, there's some space in there, right? Price pulls away from the BBC, that's step 2. Step 3 is price pulls back down, tests the BBC, and closes in the direction of the cross. This one actually dropped down below it, and then it closed in the direction of the cross. Step 4 is look for divergence on the slingshot. Divergence on the slingshot means there is space between the green line and the cycle portion of the slingshot. And when you're taking a trade off the BBC, the color has to match. It's got to be blue to take a trade off the BBC. If it's not blue, then you need the trend line. Okay, so in this case right here, the up close of this bar was the spot to get long. Okay, the up close of that bar was the spot to get long. That's it. That's all there is to it. That's the trade off the BBC. You know, if you're going in the other direction, it's the same stuff, just the opposite direction. The color's got to be red. It's all the same stuff. That's it. That's what we do all day long in the live trading room. Well, not all day long, but all morning long in the live trading room. Now, all these black trend lines that you see drawn on here, I draw those on the market. They're not pre-drawn. They're not automatically drawn. I manually draw them on. The trend lines come into play in 2 different occasions. Okay, one of them is right here when there's so much momentum in the market that the market is just moving up and it doesn't pull all the way back down to the BBC to give you this type of setup right here. All right, it doesn't pull all the way back down to the BBC because it's got so much momentum. In this case, like let's look. Hang on. We'll just look at what's right here. Okay, in this case right here, what you need to do is draw a trend line down the tops, like I've done. Oops. Like I've done right here, a trend line down the tops. Oops, my accent just came out there a little bit. And look for the divergence down here on the slingshot. You still want to have divergence on the slingshot. The color of the cycle isn't important anymore. Okay, you don't have to have the right color. But what you do need to have is a close above that trend line. An up close above the trend line if you're going long, or a down close below the trend line if you're going short. Like over here. Alright, a down close below the trend line if you're going short. Alright, that's it. Those are the trades, those are the setups, that's all there is. That's what we do. Okay? There's the black line entries, but I'm not going to go into that here. There's a ton of them in here. There was, you can make a living off of those all by themselves, but I'm not going to go into that right here. So that's it. That's what we did today. All right. You can see I drew all these trend lines on here. There was an opportunity to short there, opportunity to short here, opportunity to go long here, and long here, and even an opportunity to get long right here. If you did get long right here, you stopped out right there. Okay. There was no opportunity to take a long off the BBC right here. And no opportunity over here either because you didn't have any divergence anymore. Things change directions. You can see down here on the cycle. The cycle is telling you, hey, we're changing directions here. And so is the MA1 and the BBC up here. It's saying we're changing directions. Start thinking the other way. Everything starts to set up the other way. You can just start trading in the opposite direction. Okay. Now you see the cycle portion of the slingshots moving up toward the middle. It's saying, well, we're going to slow down here. We might flatten out. And it did flatten out for a little while, and then it made another big move down. At this point, it needed to reset down here, so it flattened out again. It reset, and right over here is where I finally took my trade here on the crude oil. I took a couple of trades in here on the crude, but I took this one right here. This one gave me, excuse me, I think this one right here by itself gave me 15 ticks. What I was looking for was the down close below the trend line. All right, this was a down close at the trend line. I was looking for the down close below the trend line. And I got in there on the down close below the trend line, and I took profit down here. Okay, now what you anticipate when you have this kind of divergence right here is... Alan, I still owe you a phone call, sorry. What you anticipate when you have this kind of divergence here is that the green line is going to work its way down into the cycle like this. Right? The green line is going to work its way down into the cycle. All right. And that's what it did. Worked its way down into the cycle. When it gets there, you anticipate another pullback. Whether you get another trade after that depends on how it all sets up. All right. Was there another trade in there? Well, yeah, right in here. Well, there was no divergence, so no, there was no trade in there. Then it changed directions. All right, you get your bullish cross. You tested the BBC with the up close. The cycle's still blue. So if you go back to what I said a few minutes ago about the cycle being blue, having the bullish divergence, step 1, step 2, step 3, step 4, right there. That's it. Up close right there was the long trade. It did it again over here, but the cycle was not blue, so you needed the up close. All right, you needed the up close over here above the trend line. Now, the original trend line was down like this. All right, that was the original trend line. I accidentally got in. I ended up taking a break even, and then I got in again when we actually closed above the trend line. When we originally closed above the original trend line. Okay, I got in again, and then redrew the trend line, and I ended up taking a break even on this trade. This was toward the end of the morning session, and this would have been the trade to put me over the 4,000 mark. But it was back and forth quite a bit in there, and it finally moved up, and that was it. It turned around. This was, I said if I had 5 more minutes right in here, would have been a short trade right here at 11:34, and that one went, I think, 15 ticks or 14 ticks. So that would have put me over the 4,000 mark too. But anyway, that's all there is to it. That is it. You can see right over here, it just did it again right here. Step 1 is the bullish cross, the MA1 over the BBC. Step 2 is price pulls back and tests it, but step 4 is that you have divergence. There's no divergence here. Step 3 is that price pulls back to test it. There was no divergence for step 4, so you wait. You just have to wait. Okay, so right over here you get your step 3. Price pulls back and tests it and gives an up close. Now when it gave the up close, you look down here for step 4. You do have divergence, and at the time of the up close, the cycle was blue. So the up close right here is your entry. Your entry's there at 92.55. It drew down to 92.50, so it drew down 5 ticks, and it went up to 92.67. So from 92.55 to 92.67. That all happened while I've been talking. All right. So that's all there is to it. That's it, guys. No mystery. That's it. Let me slide that off, and we'll jump over here to the Russell. Okay, I don't think we took a single trade on the Russell today. But I'll show it to you anyway. All right. You got to remember, the slingshot is everything with these setups. All right. The slingshot just gives you so much information. In here on the Russell, I didn't take a single trade, but that doesn't mean that none's set up. All right. There was one right here. Shortly after the open, there was a shorting opportunity right in here. Then it turned around and it started moving up. On the way up, it was in the first 10 minutes or so here, and I was getting my weekly trading zones set up, I think. And right in here is the original trend line. Now you didn't get an up close above it, so you have to redraw that to right there. Okay, you finally did get an up close right here, and then that worked itself right up into the weekly trading zone. No trading when it's inside the zone like that. There was an opportunity to short. Right in here, there was an opportunity to short. That went nowhere. If you would have taken this trade, you probably would have stopped out on it. Okay? Not every trade works out. I know. It's not the Holy Grail. Not every trade works. But right in here, if you would have taken that trade based on the same information, you probably would have stopped out on it. Okay? Price dropped back down through the BBC. It went back up through the BBC, so there was no opportunities in there. It got back into it, and right over here I had highlighted this area right here. Because we had the bearish divergence, it came up and tested the BBC and gave a down close. So I had highlighted that area. The cycle was red. You could have shorted coming out of the weekly trading zone right there. It dropped all the way down here, and it gave another shorting opportunity right in here on the way down that I had highlighted. And turned around, and you can see it's just moving up right here now. Okay? That was it. That was the Russell. I didn't take a single trade on the Russell this morning. Okay, gold. Let's look at gold. I did take some trades on gold. As a matter of fact, I took this trade right here on gold, and I'll show it all to you in a minute here. See, I took a bunch of trades on gold. I mean, I ended up, what, plus 21 ticks on gold? I had a losing trade in here somewhere, I think, on gold too, didn't I? I don't know. Let's go over this. Actually, I didn't have a losing trade. I had one break-even trade and a bunch of small wins and one big win. The first trade right here, we had the MA1 crossed up above the BBC. Price moved up, it pulled back down. Now when it hit the BBC right here, we had the divergence for step 4, but the color of the cycle was red. So for that, you need to close up above the trend line. Okay, I actually did that one wrong, and I took the up close right here. But either way, I took a little bit of profit on it, and there was just a little bit of profit available. If I had waited for the up close right here, when it made the up close right here, I would have moved my stop to break even on that trade. All right, that's just a little bit about risk management and how I do it. Very aggressive, but it is what it is. All right, so the next opportunity was right here, and the cycle was blue. So this one, I took the long trade right on the up close. It got up above the MA1. I thought it was going to close up right here, so I had moved my stop. To break even, and I did have a losing trade. This was a losing trade right here. Okay, I had moved my stop to break even, and it came back and got me out at break even. I jumped back in it right here because everything was still there saying it was going to go up, and I drew this box in, and I was looking for the explosive sort of trade. No, everything said it was still going to go up, so I got back in it right here, and it stopped me out right here for -8 ticks. That had put me at, I think, -6 total on the morning because I was +2 on this one, I think, and I was break even on this one, -8 on this one, so I was -6 at that point. I got the 6 back on this trade right here. Now on this one, you had the bearish cross, the test of the BBC with a down close with the bearish divergence. Everything was in place. I took the trade. I took the profit. I took this one over here. On this one, you had the bullish cross, the test of the BBC, and when you had the up close off the BBC, the cycle was red. So you need the close above the trend line. Okay, you need the close above the trend line. Get that close above the trend line, and up it went. I took some profit on that one. You see me drawing all these trend lines in here during the live trading room. I was drawing trend lines all over the place. There were a couple of spots in here where I didn't draw trend lines where there were opportunities. I'm just seeing them now. Right in here, you could have shorted right there for a little bit down. Over here, by the time it closed down below that trend line, there was no opportunity. Now I remember during the live trading room, Jeanette had asked me a question about this, and I had just said, well, there's no divergence here, but the divergence is about to set up. And as I was saying it, the divergence did set up. And I plopped an order on right here for gold, and I entered at 84.5 is where I actually got entered. The down close right here is what I was looking for. Okay, right there, that down close at 84.5. 84.5 is where I jumped in. 84.6 was the actual down close. As soon as I put that order on, you can see it dropped between here. It's 11:07:03, and right here, 7 seconds later. Okay, it was 7 seconds later from here to here. I saw the thing just disappear off of my DOM, and so I dropped a buy. Well, I was short, so I dropped a buy stop on it to lock in some profit, and it had gone way down here, and then it actually came back over here. This was, I don't know how many seconds later that was, but yeah, it's all in 1 second right here. From right here, 11:07:10. This is still all in 1 second right here. So it was all the way over here that it actually took me out. But anyway, that's why I don't put targets on the gold. All right, if you don't have a target on the gold, you can get into some of these things from time to time, and it'll drop 40 or 50 ticks in just a couple of seconds, and you can just take a whole bunch of profit on it. That's what this past week I started trying to highlight areas. I've been drawing boxes on areas where I think it's coiling up, and it's going to be explosive if it gets out of that. Okay, that's when you see me drawing these boxes like that. That's the kind of thing that I'm looking for. That's the kind of trade that I'm expecting. Okay, and you can see it happened over here again. This was 11:15, so all these bars were in 1 minute right here. Okay, that was this morning on gold. All right, we were up 21 ticks on gold this morning. 21 ticks on gold. There's a ton more opportunity in here, and I'm sure there will be throughout the day. Okay, right now it's pretty choppy. If I were going to draw anything in here, I would draw a box like this, just like that. Maybe we'll be able to come back to that. before I'm done with the recap. All right. Let's see in here. This is the NQ. I didn't place a single trade on the NQ this morning. I did highlight a couple of areas, but I didn't place a single trade. I didn't have an NQ DOM open. Let's just go over a couple of the areas that I highlighted. Right here in the morning when we opened up, there was an area right here to buy, to go long. Another area right in here to go long. Bearish cross, tested the BBC with a down close with red on the cycle, so could have shorted right there for a small amount. Nothing in here. Up here on this up close right here, you could have gotten long. Now, the ES was all around a weekly trading zone for a while here, so I wasn't really marking things up on the other indexes, on the other stock indexes. But that is what there was available. Okay, this is 10:30. We're an hour into the day right here, and there was a bunch available on the NQ. We've got a down close right here. The cycle was into this sling. I mean, the green line was into the cycle. That's why this isn't circled with an ellipse right here. Over here, there was an opportunity to get long. Over here, there was none. Over here, there was none. If you just go through it all, like right now, we have bullish divergence, but you would think that the trend line would be right down here like that, but it's not. The trend line is like this. Okay, we have bullish divergence right now. This is your bullish divergence, but there's red on the cycle, so you need an up close above that trend line. All right, and that's it. That's what we had on the NQ. Let's do the soybeans. After the morning session closed, the soybeans had a huge run up. We had 2 trades on the soybeans this morning. Our first one was right here. Pretty much after the soybeans opened up, we got long in here. It gave us about 5 or 6 ticks. I moved my stop to +2 ticks, and it came and took me out at +2 ticks. The next one was right here. It came down and hit the BBC and had an up close with bullish divergence and a blue cycle, so I got in on the up close right there. Okay, I got in on the up close right there on the soybeans, and that had given us, I think it was up to +10 ticks at one point, which meant we had 8 ticks profit in this trade. I had gotten in right there at 55.5, and it went up to 58. So I guess I had more than 8 ticks. I had 10 ticks profit in that trade at one point. And I moved my stop up to I think I had it +6 ticks, and it came back down. It hit me at my stop at +6, and it slipped me 1 tick. So I ended up with +7 total because I had 2 over here and +5 on this one is what I got. All right. That's what I did on soybeans. There was another trade that set up on soybeans in here somewhere right here. There was a trade that set up on soybeans that definitely would have stopped you out had you taken it. All right, right there. Would have stopped you out. It had the bearish cross, the test of the BBC, the down close, and bearish divergence with a red cycle. If you took that, you did get stopped out. All right, I didn't take that, and I didn't take this either. Right in here, bullish divergence to close above the trend line, right there. Okay, that was a nice one. Right now, it looks to be sort of recovering off of that big move up. If we were to look at it right now, the area that you would have traded or could have traded would be right there. Could have been short right there at 14.62 even. All right, it dropped down 2 cents from there so far. Look for the green line to work its way down into the cycle. That's what you're looking for. All right, those are the soybeans. Was it better than expected reports on the beans? Yeah, it's shown in the price, but right now, look at them tank. The green line's just about down into the cycle now. All right, now you heard me go over that a little while ago on whatever market I was looking at a few minutes ago. When you have divergence, you anticipate the green line is going to work its way into the cycle. Okay, soybeans $12.50 a tick per contract. Right, $12.50 a tick per contract. Okay, so that's the green line is just about in the cycle. I would lock in a whole bunch of profit right here. When the green line gets to the cycle, that's when you're anticipating another pullback. Okay, it's going to pull back toward the BBC. Probably set up another trade for you. Okay. The ES. Let's just look at the ES. I didn't trade the ES this morning. There was one trade that I pointed out that would have stopped out on the ES right here. All right, it was pretty early on, right at 9:33. If you got short right here, it only gave about a half a point or so before it turned around. Then it went right up, and we had the weekly trading zone up here. Let me just flip this really quick. There. Okay, you can see the weekly trading zone is right there when it comes back up. For some reason it's not showing up on this one. But there's a weekly trading zone right here. Not there, right there. And I wasn't going to go long into any weekly trading zones. All right. On the short side, there were a couple of opportunities in here, but nothing was working out. I wasn't really paying attention to the ES. Okay, but there were a couple of opportunities in here to look short. Right in there, the trend line, the down close. Yep, right there, and that would have stopped you out. On the long side, going right into the weekly trading zone, nothing happening. All right, on the euro, I'll do the euro and the natural gas, and that will wrap it up. On the euro, there were a couple of trades that I pointed out. What's that, Dwayne?
No, I didn't say anything.
Oh, okay. Okay, I thought you said something. I'm sorry. On the euro, there was a ton of opportunity on the euro today. I had my Eurodom open for a limited time, and then by the time we had these trades where I was actually going to put a trade on, again, this one would have put me over the 4,000 mark. But when we got to the point where I was going to put the trades on, I was actually watching natural gas, because natural gas had a report right here at 10:30. So I had a natural gas DOM on instead of a Eurodom. As it were. We got the down close below the trend line right here. A nice move down. There was another one over here. Right in here as well. If we were drawing a trend line, well, let's just start over here. Okay. 9:30 came back up, tested the BBC. The black line got up above the BBC here. You see the MA1 and the black line are not on the same side of the BBC, so there was no trading in there. It pulled back up here. It didn't actually hit the BBC, and we don't actually have any divergence, so there was nothing happening in there. This is your trend line over here. All right. So by the time you got the close below the trend line, by the time you got the close below the trend line, the green line was into the cycle, so there was nothing there. This right here was the trade. Right there was the trade to take. There was another one right over here at toward the end of the morning session. Again, I didn't have my DOM up, but that would have been enough, I think. All right, that was the euro. Now I'm going to put that. I'm going to put that back over here, and let's blow this one up right here. Okay. This is the natural gas. You can see right here when the natural gas report came out at 10:30. Between here and here is 1 minute. So all these bars are 1 minute. Not really tradable in there. And before the natural gas report came out, it wasn't really tradable. It was just a mess in there, so I wasn't even looking at it. Then the natural gas report came out, and it started bouncing all over the place. There was an opportunity in here. I was late. I didn't get into it. I drew a box over here. Then I stopped paying attention to it. We were waiting for it to get out of the box and give us a shorting opportunity. I drew the trend line in here. We needed an up close. We didn't get it. I drew a trend line over here. We didn't get it. This was a trade that Frank took in the live trading room this morning right at the end of the session. And he typed it in, and I read it out loud to everybody. But 478 is where he shorted it right here, and that gave him, I think you took 12 ticks on it. I didn't do anything. But right in here was another opportunity. This was during the break. The down close right here. You see we had the bearish divergence. Bearish divergence, red cycle, bearish cross, space, test, down close. Step 1, step 2, step 3, step 4. And down it went. Then you had in the opposite direction, step 1, step 2, step 3, step 4. In the opposite direction for the long trade. That's it, guys. That's it. I mean, if you take nothing else away from this, understand that we use the same exact time frame on every single market. We use the same set of indicators on every single market, and we use the same setups on every single market. Every bar is the same size. Every stop is the same size. Stops are all 8 ticks. So you only really have to master the trading. That's it. You just have to learn how to place the trades and how to manage the profits. That's what you need to do. It's We've made things. I think we've made things as generic as we can across all these markets that we trade, and that's it. All right.
So what you're actually saying is that this may not be the best trading method ever created.
No, no, I don't think it's the best one ever created. I just think it's.
Could it be the most simple?
It is simple. It is simple, and it works.
And do you think, in its simplicity, that it's something that an average person could emulate?
I do. I think if people can follow.
All joking aside, guys, that's really what we've tried to do. Is we've just tried to reduce it to the lowest common denominator. Just repeating the same thing over and over. Because trading can be an overwhelming thing. There's so much stuff, man. Indicators and terms and this and that. And so we're not saying you shouldn't learn all that other stuff. Over time, you will. You'll absorb it just by being around it and hearing it. But when you're trying to get started, wow, it is overwhelming. And in fact, we were a little overwhelming in the beginning because we were trading a lot of different setups in some different markets, and new people would go, man, how am I supposed to know which trade I should use when? And so we've just kind of, through time and trial and error, we've ended up where we are now with a setup that, again, it may not be the greatest setup anybody ever created, and it's certainly not the only setup that works in the markets. Please don't ever get us wrong there. There are plenty of ways to trade the market, lots and lots of ways. This is just one way. It's a way that's as simple as we could possibly make it, and it's something that we actually think the average person can learn how to emulate. Now, whether you have financial success or not, we can't guarantee that. No one can. You have to bring a lot of things to the table. Discipline, focus, attention, You can't buy those things. You have to bring those. You can buy indicators, you can buy methodologies, you can, buy time with a trainer, but you can't buy the things I just mentioned. You have to figure out. We talked about that at the end of the radio show yesterday. Somebody asked a question. And so if you missed the very end of yesterday's show, go listen to the podcast. That last 15 minutes, I think, was informative. So, okay. Well, Michael,
Right.
Great job. Another great month.
Yep. Put it in the books.
I suggest we just keep doing what we're doing.
I think we ought to. I think we'll just keep on doing what we're doing. People seem to be catching on, and honestly, from the results that people are telling me, for the most part, the results that people are telling me, if they're following the directions, if they're following the plan, then they're doing well. And Frank is our the morning session, when I opened the charts up at 7:30 this morning, Frank started going through, just like typing in his whole thought process, because he was trading based on my charts, and he was typing in his whole thought process. Where are you right now on the euro, for instance, Frank? Because that's where you start out trading in the morning.
Okay, our friends out in Las Vegas, Nevada, they've been waiting.
+28. All right, let me shut off the recording and we'll head out to Vegas.